Breaking news: Europe's major energy shift threatens U.S. market dominance. In a significant pivot reshaping global energy dynamics, European nations are turning away from American natural gas suppliers in favor of Canadian alternatives. This strategic shift, amid rising tensions and concerns over U.S. trade policies, marks a substantial change in transatlantic energy relations. The transformation stems from America's high pricing strategies and what European leaders perceive as aggressive political leverage in energy trades. The situation intensified following President Trump's stance on Canadian tariffs, which left European businesses questioning U.S. trade partnerships. What we're seeing is a fundamental restructuring of energy alliances, says analyst Michael Thompson. Canada's reputation for environmental stewardship and their natural resource reserves make them an attractive partner for European nations. The implications extend beyond natural gas. European automotive manufacturers are strengthening ties with Canada for critical minerals and green technology development. This pivot threatens America's traditional market dominance. Canada's appeal lies in its vast resources and commitment to environmental protection. The country is investing in LNG terminals while developing renewable energy infrastructure. This approach aligns with the EU's 2030-2050 green energy targets. For U.S. energy giants, this shift represents lost revenue and declining influence in global markets. Industry experts estimate significant impacts on American LNG deals and investment plans. Canada's cooperative approach contrasts with U.S. protectionist policies. European leaders appreciate Canada's predictable stance, especially regarding critical mineral supply chains and green technology development. This realignment reflects a broader trend of nations seeking reliable and environmentally conscious trade relationships, potentially reshaping global economic power structures for decades to come. In a significant shift reshaping transatlantic relations, European leaders are increasingly turning to Canada as their preferred partner for energy and automotive sector cooperation, moving away from traditional U.S. dominance. While Canada currently lacks large-scale LNG export infrastructure, substantial investments are planned to meet European demand. This strategic pivot comes as U.S. protectionist policies have strained relationships with European allies. We're seeing a fundamental realignment in trade partnerships, says energy analyst Maria Thompson. European decision-makers are clearly signaling their preference for more cooperative, environmentally conscious partners. The automotive sector shows the most striking example of this shift. With the EU's 2035 ban on internal combustion engines approaching, European manufacturers are seeking reliable suppliers of critical minerals for electric vehicle production. Canada's vast reserves of lithium, nickel, and cobalt have become attractive, given the country's environmental stewardship. While the U.S. possesses similar mineral resources, environmental regulations and political gridlock have made extraction challenging. Washington's reaction has been diplomatic, acknowledging Europe's right to choose its trading partners. However, American energy and automotive lobbies express serious concerns about potential losses. The shift reflects changes in transatlantic relations. The America First approach and ongoing protectionist measures have eroded European confidence in U.S. leadership. Canada's moderate profile and environmental priorities align better with European values. Industry experts predict this realignment could impact U.S. global market influence as Europe's green transition gains momentum. With Canada positioning itself as a reliable partner in energy security and environmental protection, U.S.-European trade dynamics are entering a new era. In a significant shift that could reshape global energy markets, European nations are increasingly turning to Canada for their energy needs, potentially diminishing America's dominance in the sector. This development comes amid growing tensions between the U.S. and European allies over trade and environmental policies. German industries have begun signing long-term natural gas agreements with Canadian suppliers, marking a departure from their reliance on U.S. energy sources. European nations, which invested billions in terminals for American natural gas imports, are now pivoting towards Canadian infrastructure. The transformation extends beyond energy markets. As the automotive industry shifts towards electric vehicles, American manufacturers face challenges. European markets are implementing stricter emission standards and higher taxes, potentially squeezing out U.S. auto giants. While Washington responds with domestic incentive packages, these actions have intensified trade tensions with European partners. Canada's approach to international trade and environmental policy aligns more with European values. Unlike the United States' aggressive trade stance, Canada's cooperative attitude and commitment to sustainability has garnered European support. The nation's policies on forest protection, hydroelectric potential, and land management resonate with EU's green initiatives. This strategic realignment comes as new Cold War scenarios emerge, particularly regarding US-China rivalry. While Europe maintains strong military ties with America, it seeks to diversify its partnerships. Canada's role is becoming increasingly vital, offering a bridge between North American security interests and European economic aspirations. The shift doesn't signal the end of American influence, but suggests a rebalancing of transatlantic relations. Europe's move towards Canadian resources reflects a broader strategy to reduce dependence on any single partner while advancing its green agenda. In a significant development transforming international energy dynamics, European nations are actively pivoting away from U.S. energy dependence, turning to Canadian resources. This strategic shift carries profound implications for North American relations and global energy markets. Major European buyers are increasingly skeptical about signing long-term LNG contracts with American suppliers, citing concerns over high prices and unpredictable U.S. policies. Meanwhile, Canada emerges as an attractive alternative, offering stable, environmentally conscious energy solutions and flexible trade terms. The automotive sector reflects this trend. While U.S. manufacturers struggle with European emission standards, Canadian-European partnerships are flourishing. This shift reflects Europe's strategy to diversify energy sources and reduce dependence on single partners. Industry analysts note this realignment could strain U.S.-Canada relations within the North American market. The question remains, can these neighbors maintain their alliance while pursuing divergent European partnerships? Key factors driving Europe's decision include growing concerns over U.S. protectionist policies, higher American LNG prices, political volatility in U.S. market, Canada's commitment to environmental standards, more flexible Canadian trade agreements. Skeptics question whether Canada can deliver on cleaner energy promises, and if the U.S. will develop strategies to recapture European markets. The answers may reshape global energy politics for decades. This story continues to develop, highlighting the complex interplay between energy security, environmental concerns, and international relations. As new technologies emerge and alliances evolve, the impact of Europe's choice will become increasingly clear. Share your thoughts on these developments. Will this shift create lasting changes in global energy dynamics?